Copper gave us some really nice volatility that we could take advantage of today. In today's video, we're going to dive deeper into what makes copper so special with today's price action, and we'll then zoom out to the daily and weekly time frame charts to see if today's volatility gives us clues around what's to come. Now, starting off first with the copper futures on the intraday time frame chart, and I'll set the scene with how it was to start the morning off. To start the morning, copper was on its aggressive Volatility Box models. We have 4 different models available for copper to pick and choose from. They range from the aggressive up to the doomsday conservative. The fact that copper started here tells us that there was little volatility to start the morning, and we can see that here on our charts. Now the 7 to 8 a.m. Pacific hour hits, and this is where volatility picks up inside of copper. You should notice copper breaks outside of our volatility box models, and this happens before we see the edge signal confirmation. That tells us that, hey, the aggressive models are no longer being respected, and we need to now adapt to the new volatility. Now we load in the doomsday aggressive models, and we now get the making of a very familiar setup, our V-shaped reversal setup. It's a very simple setup. First off, we're looking for a breach of our cyan entry line. When that happens, which happened with these red candles right here, that tells us we have a volatility edge. After that happens, we're looking for this green arrow. That tells us that, hey, we're officially now in overbought or oversold territory, and we're looking for the other side to step in this case, the buyers. Now, there are 2 bonus things that also appeared in this setup. The first were these Keltner channel wedges, and we saw more than 5 of them print. That tells us that price is closing outside of the 3.0 Keltner channel clouds, and we're looking now for a reversion to the mean. So it's telling us you have a volatility edge and you have a price edge. The second thing that stood out that's optional, the momentum cross. This is simply looking at the 3 EMA and the 8 EMA, looking for them to cross, and you can see that the momentum switches shortly after the very next bar after in which we have the actual edge signal confirmation. So the 2 went really nicely side by side. Now in both cases, we got the opportunity to enter at the cyan line, and in some cases even better than that. The risk on this particular trade was 100 ticks. Now 100 ticks represents about $250 per full-size contract, and that's what we were looking for in the first target move, which was hit in this red candle right here. So the first target, again, the same amount that we risk, which is from the cyan line to the outer edge of the clouds, hit in this red wick right here of the red candle. Now after that, we move our stop up from the remaining contracts up to break even. This allows us to get a little bit greedier with our second target, which is at the opposite side's gray target line from that same hour. If you remember, our first target was 100 ticks, which is what we risked, and we moved our stop to break even. The second target, to give you an idea of how greedy it is, nearly 265 ticks. It allows us to score some nice home run trades, and we have that break even stop for the times in which the trade totally reverses. Copper today, almost a picture perfect move right up to the second target, right into the lunchtime hour before we see price fade away from there. So copper, really nice picture perfect V-shaped reversal today. We had price fall right inside of our volatility box models, take advantage and capitalize on that intraday volatility, and we had the makings of everything we've talked about in our V-shaped reversal course. Now comes in the daily time frame and the weekly time frame. See if there's any other clues here. On the daily time frame, to me, this looks about as picture perfect of a bear flag as you could get. So far, still chopping back and forth, and I'm looking for this flag to break and then that retest to try and get short. Now, it's on the weekly time frame chart that I think you could build a fairly solid bearish case with this market pulse just having switched to the stage of deceleration and price pulling back right up near the market pulse area. So if we can see a similar V-shaped reversal setup, just like the one we saw today, but really with more of a bearish bias, I think that would be a great opportunity to try and swing some longer term options and contracts on the actual HG futures. I hope you found today's video helpful in understanding how to take advantage of the volatility that we saw inside of copper, both with the actual futures contract, along with a longer term swing trade idea based on the volatility we're seeing. Take care, everyone. Good luck trading, and I'll see you in our next update.